Hello everyone and welcome back to the Option Writer. What I wanted to do today before the end of the month is do a morning video. I usually don't do morning videos, but really there's a lot of things that we can talk about today, and instead of posting them all throughout the day, I figured I'd just do a quick video here and kind of go over some of the more important key issues that we have going on in the market. It is the 29th today. One more day until the end of the month, and really till earnings season starts to get kicked off. Starting with the S&P, I've said over the past couple weeks numerous times that this Fibonacci level here is really important. If you go back, I mean, this thing goes back all the way back until the top in 2007. So it's a really important level. It's a 50% retracement level of the entire move that the market made from the high in 2007 to the low to the bottom of the market in '09. So that's a really important level here, and we're just having such a tough time breaking above it. And it's also correlating. It happens to be right in an area where it looks like the 50-day moving average and the 200-day moving average are going to do a bearish dead cross, where the 50 crosses below the 200. That's not a good sign. And it's also not good that the markets didn't hold above that 200-day moving average level either. Now, for today, it already looks like the futures have sold off pretty good here in the early morning. A lot of news out of China growth that's getting the market scared. I think that the main thing that we need to be concerned about is watching this 1040 level here on the S&P. That will be the big telltale sign. If it starts to get really weak around that area and breaks it real easy, we could be heading down to the next lower level here, which would be this Fibonacci line right around 1013, 1015. So that's really what to look for on the S&P. For some of the other things, I just wanted to point out the TLT. These are the Barclays iShares. These are the ETFs that track the 20-year and longer treasuries. The interesting thing about these right now is that they're just having a fantastic time. I mean, anyone who's bought into these in the last 2 or 3 months here has had a really great return. What I just wanted to kind of let everyone know about and wrap their head around is that as bonds are going up and yields are falling, that means people are running to bond pricing, and they're buying up these bonds at alarming rates really right now for the equity markets, because they're scared about the equity market. Choice to put their money in stocks or in bonds. And when they put their money in bonds, they're taking their money out of risky equities and going and fleeing to the safety of the bonds. So this is a pretty interesting chart. You can see I've drawn a couple trend lines here. Definitely this major one here that is following the underneath side of. If it breaks above this kind of apex where it's at right now, it could easily head up into the 102, 105 range overnight, really. So we definitely want to watch these charts, take a look at those, and know where they are in relation to the equity markets. As far as the euro US dollar, again, you can see I have a lot of Fibonacci's on my trading screen here, but this one's another really good one to watch. It seems like the euro has come off of this low here down below 120 and is really going to start bouncing off of this thing. I'd like to see it start bouncing. You can see on here, and I'll just draw it with the circle here, you can see how far away the 50-day moving average and the 200-day moving average are. Now, even though I know there's a lot of news out there, and I'm probably the only one who's saying this, usually when these types of moving averages get stretched this far, there's usually a good likelihood that the market or the security, whatever it is, in this case the currency pair, is going to snap back into a more reasonable type range. So I wouldn't be surprised to see the euro US dollar back up around 130 by August. Now again, I know that that's a far-fetched prediction in this market, but that's just who I am. Anyways, that's going to pretty much end it for me. Hope this turns out to be a pretty good day here. Good selling would be nice. Get the markets a little bit more oversold for a better, stronger bounce. But until then, we'll just have to wait and see. Happy trading.